5 months ago, I got tired of waiting 3 months for my dividends to hit. I wanted real passive income flowing in more frequently. So I built a small portfolio designed specifically for monthly payouts. Today, I'm sharing the exact 5 stocks I chose, the real yields I'm seeing right now, the cash I've actually received, the risks I had to accept, and whether this strategy is truly worth it for everyday people trying to build passive income this year. This isn't some flashy, get-rich-quick video. These are real companies with real dividends hitting my account almost every 30 days. No hype, just honest numbers and lessons you can actually use. If you're tired of your money sitting in a savings account earning pennies while inflation quietly steals its power, or you're looking for a way to start generating income that feels consistent, stick with me. By the end of this video, you'll know exactly which 5 stocks I'm using, why they pay monthly, the deep pros and cons, and how you can start building your own monthly income stream safely. Let's dive in. First, why monthly dividends are such a big deal in 2026. Most stocks pay you every 3 months. You wait and wait, but monthly payers send cash every single month. It feels more real. It helps with budgeting, covering small expenses, or automatically reinvesting to compound faster. In today's market with prices still high and some economic jitters, that steady drip of passive income gives you both peace of mind and real momentum. So here are the 5 stocks powering my monthly income right now. I'll give you the company, approximate current yield as of late June 2026, why I picked it, and the honest truth about the risks. Number 1, Realty Income, ticker O, the monthly dividend king. This is the cornerstone for many monthly income investors. Realty Income is a REIT that owns thousands of single-tenant commercial properties, places like Walmart, Dollar General, and convenience stores that people need every day. Current monthly dividend yield, around, for 0.8 to 5.2%. Why I chose it? They proudly call themselves the monthly dividend company. They've raised their dividend for over 25 consecutive years. In 2026, with essential retail still strong despite online shopping, they continue delivering reliable payouts. The honest risk, like most REITs, they can get hurt if interest rates stay high for too long or if a recession hits commercial real estate hard. Property values and borrowing costs matter, but their focus on long-term leases with strong tenants has given them excellent resilience over decades. For me, this one feels like the safe, boring foundation. Every month, I get that small deposit. Boring? Yes. But boring is what actually builds wealth over time. Number 2, EPR Properties, ticker EPR. This is another REIT, but focused on experiential and entertainment properties, movie theaters, ski resorts, dining experiences, and more. Yield, roughly 6.5% paid monthly. Why it earned a spot? After the pandemic challenges, people in 2026 are going out again for experiences. EPR has adapted well and maintains a solid monthly payout. Here's the reality, though. Entertainment can be cyclical. A bad economy or another unexpected disruption could reduce attendance and pressure payouts. I keep my allocation reasonable here because of that extra volatility. But the higher yield makes it worthwhile for the income portion of the portfolio. Number 3, Main Street Capital, ticker Main. This is a business development company, or BDC. They lend money to and sometimes take equity stakes in small and medium-sized businesses. Yield, around 7 to 8% paid monthly. Why I like it in 2026. Main Street has a conservative approach to lending and a strong track record of growing dividends. They focus on solid private companies rather than the riskiest ones. Deeper analysis. BDCs carry credit risk. If borrowers struggle, it affects returns. But Maine has one of the better managed portfolios in the sector with lower historical defaults. This gives me both income and some growth potential. Number 4, SL Green Realty, ticker SLG. An office-focused REIT with properties in major markets. Yield approximately 5 to 6% monthly. Why include it? It adds diversification away from pure retail and entertainment. In 2026, premium office space in good locations is adapting to hybrid work and still generating solid rents. Office real estate is still evolving with remote work trends. Not all properties are equal. I keep this allocation smaller because of the sector headwinds, but the monthly payout and potential recovery upside make it interesting. Number 5, AGNC investment, ticker AGNC. A mortgage REIT that invests primarily in agency mortgage-backed securities. Yield, often in the 12 to 14% range, one of the highest monthly payers available. This is the aggressive income play. In the current higher rate environment, AGNC can generate strong yields. Brutal honesty. Mortgage REITs are very sensitive to interest rate changes and can see big swings in book value. This is higher risk than the others. I treat it as the spice in the portfolio. Great yield, but I wouldn't put everything here. Real results from my portfolio so far. With a modest starting amount spread across these 5, I'm currently receiving roughly $35 to $45 every month in dividends. That number will grow as I add more capital and reinvest. The power of compounding monthly is real. Every payout gets automatically put back to work buying more shares. The deep lessons and risks you must know. First, diversification matters more than chasing the highest yield. Don't overload on one stock or sector. Second, taxes are real. Dividends are usually taxable. Holding these in a tax-advantaged account, like an IRA, can make a huge difference. Third, high yields often come with higher risk. Always check the company's dividend history, payout ratio, and overall financial health. Fourth, interest rates and the economy still drive these stocks. Watch Federal Reserve moves closely in the second half of 2026. Fifth, start small. You don't need thousands to begin. Even $100 to $500 per stock can get you started and teach you the process. How you can start building monthly income today. 1. Open a brokerage account. Many have 0 commissions. 2. Research each stock's latest reports. 3. Buy small positions in 2 or 3 to start. 4. Turn on dividend reinvestment. 5. Add to your positions monthly if possible. 6. Be patient. This is a long-term strategy. This approach won't make you rich overnight, but creates a real, growing passive income stream that compounds while you live your life. In 2026, with markets near highs but uncertainty still present, monthly dividend stocks give you both participation and regular cash flow. The 5 I shared are working for me right now. They're not perfect, but they deliver real money every month. Drop a comment below. Which of these 5 appeals to you most? Do you already own monthly dividend stocks? What's your experience so far? I read every comment. If you want a deeper dive on any single stock, my exact allocation, or a follow-up update in a few months, make sure you're subscribed and hit the notification bell. Thanks for watching all the way through. You're already taking a smart step by learning how to make your money work harder for you. I'll see you in the next one. Start small, stay consistent, and watch those monthly dividends roll in. Take care.